Good day, everyone. I hope you are all doing well. By way of introduction, I am Arson Malola, and I will be taking you through all the accounting aspects of this APC workshop. Most of you joining ahead of the December 2022 APC assessment. I am part of the professional team in Dunamo, in the Dunamo professional course, or EPC, and I generally take care of, or not generally, I primarily take care of all the accounting aspects of such program, and also assist with all the taxation matters. I also assist with the accounting in our ITC programs and our CTA program. When I'm not assisting in Dunamo with all things accounting, I head up the technical accounting advisory function in one of the leading financial institutions in the country. So today, or at least in this session, we are going to be covering the pre-release information as it pertains to the accounting tasks in the March 2022 APC case study or exam. So we're going to zone in to specifically the emails that relate to accounting, and we're going to have an accounting angle as we go through it, informed though by specific wording that is in the pre-release information, which I'll definitely make clear as we read along, because ultimately when you read through the pre-release information, it is always very important that you have you employ some broader thinking across all the disciplines, and not a sort of think narrowly. But in this scenario, we are going to be thinking predominantly from an accounting angle, but I will highlight which statements or sentences that made us think in that way. Okay. So how are we going to approach this? We are going to, in fact, if you haven't already read through document number 2 once, I suggest you pause this video right now and you do so, right? Because when it comes time to read the pre-release information, I always recommend that you get through the information at least once, making some notes on the side very quickly, noting what you're thinking, some high-level questions that you have, and sort of the direction in which the case study is taking you. And then once you're done working through the case study once, in this case, once you're done working through this email once quickly, we're going to come back to the email, right? And then we're going to deep dive and analyze deeply each sort of paragraph or sentence, and sort of ask some few critical thinking questions when we critically read through the email, to ensure that we're unpacking every statement as we can, and also at the same time making sure that we stay honest and we're not going overboard in our thinking. So if you haven't already, please pause right now and read this document number 2 at least once. Cool. So what are we going to be doing? We're going to be, after now you have read this email at least once, we are going to be reading this sort of email on a line-by-line basis, identifying triggers, identifying the context, identifying and noting any negative triggers, and just working through the document slowly but surely. Where we can or where we must, we will just also go and have a look at the accounting standards, just to, again, continue to analyze the information that we are seeing. All right, so let's jump right into it. So this is an email from Susan, who's the CFO of the company. And then we are the senior financial analyst, and the subject says disposal of the pre-primary schools. Okay, so just a little bit of context into what we're supposed to do. And we have an attachment, which is a summarized financial and other information for Limpros pre-primary schools as well, which is very interesting. Hi again, I hope you're settling in well. So glad you're part of the team, as things are extremely hectic now with all the new developments. Recently, we have been discussing some transactions that we have not dealt with previously. Your up-to-date accounting knowledge will be beneficial as we deliberate the various options with the wider team and the board. Okay, so already, and I mean, you would have already read this document once over. So you already know that this email has a significant accounting angle. But even just reading this for the first time, if you like the first time you read it, I'm hoping you were already sort of thinking about your frame of mind. So firstly, Susan seeks your up-to-date knowledge as we deliberate options with the wider team and the board. So what's important here is that accounting angle, right? So at this point, this is not an accounting trigger, right? So I'm not saying that now only think accounting. It's just that the theme of this email is going towards accounting. Only later on does it become quite much clearer, which you would have encountered the statement later on in this email, sort of almost zoning you in on the accounting. But at this stage of the game, this is merely just like a direction in which this email is going, right? So it has a very strong accounting angle. And very clearly we're going to be assisting with something. And what's also very important is that is the audience. I'm hoping that potential audience, rather, let me put it that way. I'm hoping at this point you are thinking, okay, cool, whatever I'm going to be doing, right, is who's going to consume this information? It's going to be the wider team, the board, and Susan herself, right? And I mean, you would have worked through earlier with Rendani in terms of Susan's own qualifications as CFO, right, accounting, and in terms of not being a CASA. But at the same time, this information is going to go to a wider team, right? So this team could be non-accountants, and it's going to go to a board, which again will include diverse skills, and you would have analyzed the board in the pre-release information as well, because you were given that information. But you would have noted that there's a lot of diverse skills and different skills that sit on the board. So whatever our deliverable is, right, this sentence is then leading me to believe that it's going to have to be explained in simple English, right? So it's taking me away from being super technical when I explain whatever I'm going to need to be explaining in relation to the disposal of the pre-primary schools from an accounting perspective, but more understandable language, right? Relatable language, such that everyone can understand. Okay, and also in terms of the length of what I give back, right? It needs to be sort of simple, it needs to be quick, not too long, so that all of these people can consume the information. But again, this is just the direction in which the email is going. We'll get more details later on, but it's important to build on the email with the examiner. So on that point, you should have seen in previous emails and slides I shared with you earlier that Limpros has 2 pre-primary schools. So linking back to the information that you were given about these pre-primary schools, which is something that you should have done in any event. Right? And what is also very important is just remembering that information, right? Like what was going on with the pre-primary schools, right? We really struggled with the pre-primary. Okay, they haven't grown for firstly, right? We still have 2 pre-primary schools. We really struggled with the pre-primary school during COVID because being agile and being able to transition into online is a lot trickier with the pre-primary school. And one could also argue that mismatch then in strategy in terms of trying to be more online and this pre-primary school which cannot really transition, or it's not really you really need a face-to-face with young toddlers. Okay, so just almost bring that information top of mind again as we work through this. As you may be aware, Limpros is embarking on the strategy of increasing blended learning offerings, being the combination of face-to-face learning and online learning in our schools division. The pre-primary schools are primarily face-to-face learning offerings, as it is difficult to engage with online with toddlers. It is therefore more appropriate for Limpros to focus on primary and high schools given the change in strategy. Okay, so we almost have a divergence or a shift away from focusing on the pre-primary school and then focusing away from the pre-primary school towards the primary and the high schools, right? Then it begs the question, right? Or a lot of questions that I'm hoping that you asked when you were working through the pre-release information, but also important now when we have an accounting angle to our thinking, right? We've got this pre-primary school that really struggled during COVID. We couldn't really shift online. We got a pre-primary school that we're not going to be focusing on from a strategic perspective because we no longer see the growth potential in this area, right? So I'm hoping that at this stage, you're thinking, okay, this should be an indication of impairment, right, for the pre-primary school, right? And if you recall from looking at the summarized information at the top here, we did have a line, if I recall correctly, we did have a line here for impairment of intangible assets and land and buildings, right? So for me, just thinking through this, I'm thinking, okay, fine, then I have this division that really isn't doing well. I haven't been told which intangibles or which land and buildings are driving these impairment lines. However, I would have expected, or it would make sense to me at least, if the pre-primary school was one that was hit quite squarely in terms of impairment from the context of it being hit by COVID and also being not part of our strategy anymore. In other words, the growth potential is no longer there, which suggests that the cash flow generating abilities of this division is not as much as management would have thought, therefore suggesting that the recoverable amount, specifically the value in use in this case, may be lower, right? So it should be an indicator of impairment, and then the question then arises, is the pre-primary school a cash generating unit? Okay, but now I'm not going to let my thinking sort of get ahead of me, but I'm just thinking about all the specific sort of concepts or what I'm being told here, how it would be relevant from an accounting perspective. As a result of the recent developments, it has been that the board has taken the decision to sell the pre-primary school. Okay, now it becomes quite interesting. As a result of one of the recent developments, it has been, sorry, let me just read this one more time. It's a bit of a tongue twister. As a result, one of the recent developments has been that the board has taken the decision to sell the pre-primary school. So at this point, the easy work here is identifying that it is IFRS 5 that we need to be worried about, right? And I'm just going to go over and read the next sentence as well. The decision was agreed and approved by the board during the third quarter of 31 December 2021 reporting period. Okay. Now, easy work is someone who just come and say, fine, IFRS 5 is my concern, right? That's the only thing you can extract from these two sentences. And I've got board approval. However, if your thinking is limited to this point, right, you are definitely not thinking deep enough, right? Because what specifically in IFRS 5 are you worried about? Because IFRS 5 is a massive standard and it covers massive things. And it's one of those standards that integrates quite nicely with other standards, right? So if you're thinking of your prep that you need to do is limited only to IFRS 5, right? Then you already have a problem in that you're not seeing the links with other standards and you may be limiting your preparation. Okay, so let's start with IFRS 5 and then we're going to expand our concerns while we ask a few questions, right? So 100% agreed, IFRS 5 is a concern here, okay? But what about IFRS 5, okay? So the first thing about IFRS 5 is the classification requirements, right? Okay, before we even get to the classification requirements, right? Remember, IFRS 5 is split between the measurement principles and the disclosure principles. Okay, so that's essentially where our thinking needs to begin. Now, in terms of the measurement principles, right, we use the IFRS 5 standard to measure non-current assets held for sale or discontinued operations, or assets in a disposal group if they meet the classification requirements and the scope, and they're not scoped out. Okay, so in thinking about the classification requirement, the key question then should be when, right? If IFRS 5 is first of all, is IFRS 5 applicable here, right? That's your first question. How do we answer that question, right? We can go right to the standard and look to the classification requirements in IFRS 5, right? Sorry, with all the notes and the highlights. Okay, and this is quite an onerous exercise, right? So, and if you look through this information, you'll very quickly remember that it is not just a board's decision to sell a division or an asset or whatever the case may be. That is the key trigger to IFRS 5 classification. It is only where a non-current asset or a disposal group is held for sale and its carrying amount will be recovered principally through sale rather than through continuing use, right? And the standard goes on to describe when this will be the case, right? It needs to be available for immediate sale, right? And the sale needs to be highly probable, which includes all of this criteria in paragraph 8 that need to be met. Okay, that is where your thinking needs to be. So what should your research look like, right? I would recommend then creating a table, right? Because now you have a question. Is IFRS 5 even applicable here? Okay, create a table. On the left, you've got all of these requirements in IFRS 5, and on the right, you have you apply these requirements to the extent that you can with the information that you have been given. For instance, if you look at the first requirement here, it says, for the sale to be highly probable, the first thing we need to meet is appropriate level of management must be committed to a plan to sell, right? I think the board approval can assist us in applying that requirement, so I can apply it. We have board approval in the third quarter of 31 December 2021, okay? However, the other requirement that says the active program must be to locate a buyer and a plan must have been initiated. Okay, maybe at this point, maybe if I read later on, I'll get that information. But at this point, don't really have it. So I'll park that bus. Why? Because I'm expecting that information from the examiner on the day if classification is going to be an issue on the day, right? So in that little box, I can think through potential alternatives, right? What will happen if they tell me that we have commenced an active program to locate a buyer? Or in other words, maybe let me think through some indicators that will suggest to me that we've initiated this program, right? Maybe we get the help of some corporate finance specialists to assist us to getting a buyer. That for me would be an indicator. So do you see how during the research sort of period, you've set yourself up in such a way that your research is not just copy pasting what's in IFRS 5, but you're applying the requirements to the extent that you can, and then where you don't have the information, you're then trying to consider different alternatives of what could come at you on the day, because that's the purpose of the IOD on the day, and you're trying to think through what would be the impact depending on where the information on the day goes, and you're almost like shifting it then from shifting the narrative from just rocking up on the day and being surprised about the information that you're given versus rocking up on the day and having expectations of the information that you require or need to make conclusions, and then sort of extract that information and then make your various conclusions, right? When you shift the narrative in this way, what it's going to allow you to do, where you create expectations in this way of the information that you're going to be provided with, what it then allows you to do is to notice gaps, right? To notice concerns, to say, I haven't been given this information, or it seems like the CFO, Susan, is not considering this aspect, which I considered during the 5 days, right? And then you bring those issues up, you bring those concerns up, and those points could land you some primary sort of indicators, or most likely going to land you some high level of application indicators. But you have sort of used the previous period to create an expectation such that if that expectation is not met on the day, you can call it out, and then that will assist you in generating points or concerns, or generating indicators towards your competent sort of outcome, right? So that's just using the classification requirements in IFRS 5 just to talk through and articulate how your research should work, how your thinking should work, or how your approach to research should be. Okay. So that's the classification, a big question here. What are we even in IFRS 5? Okay, the board decision takes us into that direction, right? So board decision, right? Appropriate level of management. level of management. However, there are many more requirements that we have spoken about. What's going on here? Appropriate, that need to be met in order for us to meet the classification requirements in IFRS 5. Okay, the decision was agreed and approved by the board. Okay, we read that sentence. All right, so that's just the classification piece. That's also one concern, right? From the scoping perspective, we know, fine, if we have and that's exactly it, right? So now the question is, what are we selling? Okay, we're selling the pre-primary schools, right? So it sounds to me as if we're selling the entire division, all right? So again, from a classification perspective, let me just copy this and then put this down there. From a classification perspective, we are considering a disposal group, potentially, right? We're disposing of the pre-primary school in a single transaction. Likely, this pre-primary school has various assets and liabilities that we need to be thinking about. So, from a classification perspective, we say, fine, is this disposal group held for sale, right? Now, if we conclude yes, right? So now remember, we are thinking about alternatives because we may not be able to get the conclusion using the information, the previous information, but we need to be thinking about different ways that this could play out. Okay, if yes, and we have a disposal group that is held for sale, right? The scope becomes quite important. Right? Because remember, the measurement criteria in IFRS 5 is only going to be applicable for the measurement criteria. The measurement criteria in IFRS 5 is only going to be applicable for non-current assets that have not been scoped out of IFRS 5. Right? We carry those at the lower of its carrying amount and its fair value less cost to sell. Right? Everything else that's scoped out, we account for it per their underlying standards. Now, again, here's where our thinking needs to get even broader, right? So for measurement, we said lower of carrying amount and fair value less cost to sell. Okay? Poor thinking, we'll leave this and move on, right? But good thinking in terms of identifying accounting issues will then say, hang on, okay, I've got two concepts here, okay, that I find in IFRS 5, but are linked to other standards, right? So the carrying amount side of things, right? Remember IFRS 5 says we need to account for assets that are in the scope of IFRS 5 per their underlying standards, right? And then to reclassify to IFRS 5 on the date the requirements are met. Okay. That now brings into scope all underlying standards, right? Furthermore, those that are not within the measurement scope of IFRS 5, we need to just account for those per their standards. All right, we never get reclassified for measurement purposes into IFRS 5. So examples of this are financial instruments, investment properties at fair value, right? And the lower of that carrying amount, right? So it scopes in the plethora of those other standards into your research, okay? And the fair value less cost to sell. Now, what this also now scopes into your research, the concept of fair value. So I'm going to write here, all underlying standards and IFRS 13. Okay. Now, fair value gets scoped into. So now you also need to have an understanding of the of how to determine a fair value, and a fair value of what, right? So as we go through our revision of IFRS 13, right, you have the general definition of fair value, which gets then sort of supplemented where you have a non-financial asset where you need to consider the highest and best use. Okay, but now the question then is, do I need to go into extreme depth when reviewing these, sort of going over these principles? The answer would be at this point, no. Right. So at this point, the clearer issue that is being highlighted here is IFRS 5, right? Because we could potentially be disposing of this pre-primary school. However, IFRS 5 almost tags along other standards as well. It doesn't come alone, right? So all the other standards that could potentially sort of pull along with it, we also need to make sure we have a general and basic understanding of, right? We can't be thinking about these things on the day. Okay, so IFRS 13, for instance, you need to make sure that you have a general understanding of the standard and how it works. Okay, a similar thing happens, for instance, if IAS 36 gets triggered, right? And then you need to determine the recoverable amount, right? Higher value in use and very value less cost to sell. Okay, IAS 36 then pulls in IFRS 13 into it as well, into its orbit. Okay, similar thing is happening here. All right. Cool. So all the underlying standards, IFRS 13, also get pulled into the ambit of this discussion. But now this is still speaking about the measurement criteria, right? Scope becomes important for measurement. Okay, happy days. We're done. Not necessarily. Okay, again, we need to also have questions about disclosure, right? And specifically, the specific thought that I'm hoping that you would have had when it comes to disclosures is, yes, of course, it's a disposal group, right? In terms of disposing of a group of assets and or liabilities in a single transaction. But I'm hoping that you also wondered whether or not this is a discontinued operation, right? Because remember, discontinued operations also have specific disclosure requirements. Now, again, just like the classification criteria, right? If you go to IFRS 5, right, and you look at the definitions, all of these concepts are defined, right? So here's what a discontinued operation is. And I'm hoping that when you ask this question, you say, fine, to what extent can I answer this question? And I'm hoping that your thinking was not, oh, let me just guess and say, fine, it's a separate division, therefore it has to be a discontinued operation, right? That's incorrect thinking. Correct thinking will say, my question is this a discontinued operation? How do I answer this question? I need to go to IFRS 5. What does IFRS 5 say is a discontinued operation? And then I need to consider the definition and then apply it and then sort of make various conclusions. So what is a discontinued operation in IFRS 5? It is a component of an entity that has either been disposed of or is classified as held for sale, right? That's a very important nuance already that most forget or don't know, right? So if you've disposed of a component of an entity, it's gone, you've disposed of it. That is a discontinued operation, okay? It's not just a component of an entity that's held for sale. It can also be one that's actually been sold in the year. Okay, that represents a major line of a business or geographic area or operations, is a part of a single coordinated plan to dispose of a major line of a business, or is a subsidiary acquired exclusively with the view to resell. Now, what's a component of an entity? That's also defined where operations and cash flows can be separately distinguished, right? So from that perspective, without going into too much detail, because that's your job, right? You can see that we would probably meet the definition of a component of an entity, right? Because the cash flows can be clearly distinguished because if you look at the attachment, we've been given the cash flows, right? But the question is this component of an entity a discontinued operation, right? So is it classified as held for sale, right? That's a question that's yet to be answered, but we can park that for now. In terms of our thinking, we can assume, okay, in the scenario where it is, okay, what else do we have to meet? Well, it either has to be a separate major line of business, a single coordinated plan to dispose a separate major line of business, or a subsidiary acquired with a view to resell. Okay, the question is, do we meet any one of these three criteria? Okay, and I'm gonna leave that to you to think about this because this is one of those areas in APC which is very different to ITC in that at an ITC level. As an examiner, you want a black and white answer from your candidates, right? You don't want any ambiguity. You want not as little, but you want to minimize the level of management judgment that needs to be made, because where judgment can be made and different arguments can be made, right? It opens up your solution to alternative answers, which become very tricky to standardize your assessing. However, at an APC level, that's all in, right? That's all in play. Examiners now love management judgment because they can assess how you think through accounting problems. Because when you become a chartered accountant, you're going to have to apply judgment a lot when you become a CA in practice. So have a look at these three criteria, right? And just think through whether or not our pre-primary school meets any one of these three conditions, right? Because it's not all, it just needs to meet one. And where you think it does, why do you think it does? And where you think it doesn't, why do you think it doesn't? And what is your concern, or what were your questions? What were your judgments that you had to apply in order to make those conclusions? Okay, but the approach to your research must be exactly the same as what we discussed with the classification, in that you are applying to the extent that you can, right? And you are thinking through these issues. And when you think through these issues in the 5 days, you come on the day, something comes at you that's not in line with your expectation. You question it, you call it out, you highlight that, okay, there's a different way of thinking about this. That's really where those indicators lie, and also what sets apart the responses that are merely competent to those that may exhibit some high levels of competence. Okay, so there's a very quick summary of the questions that you should have been asking, how you should have been thinking, and a reminder that, remember, it is not just FS 5, right? That's just the tip of the iceberg. It's everything else that comes along with it that you also needed to be thinking about. Okay, we have today not entered into such a transaction, and I am sure that there are numerous accounting and related disclosure consequences. Now, again, not again, I didn't say anything, but I mean, in reading the statement, we know this, right? Because we have thought through it. Okay, the examiner is highlighting to you, right? Now we can say, okay, fine, this represents a trigger, right? Some sort of to do, right? This is the Susan rather telling me that as part of this task, or what you're going to find on the day, accounting is going to be an issue, and disclosure is also going to be an issue, right? So we've not entered into such a transaction, and I'm aware that there are numerous accounting and disclosure related consequences. So in other words, think about the accounting consequences, think about the disclosure consequences, as we have done here, as we have asked all of these questions. I've attached a summarized financial information for the pre-primary schools division. Awesome. So now remember with APC, you can have a scenario where in your pre-release information you are given rich information to dive into and think about, or you can be given a very high level direction, right? So this is an example of, I mean, you've already read this, so I can actually scroll down here, of being provided with rich information. I mean, look, there's 2 pages worth of information for this trigger, right? This is a lot to work through. This is a lot to analyze. And we need to make sure that we deep dive and analyze this, because the reason why we've been given all of this information is because there isn't time to think about the stuff on the day, right? So we need to come prepped and ready, having already unpacked this information, having already generated an expectation of where this could potentially go. Or you can just be given a high level direction. We're disposing of the pre-primary school division, and I understand that there are accounting consequences or whatever, and we're not given anything more, right? In that scenario, you can think through some things like we did with the classification, but then you can't go any further than that, right? It's very difficult to go any further than that. The accounting impact of the decision to sell the pre-primary schools has not been taken into account in any of the financial information provided. Okay, so again, this hasn't been accounted for yet. So this has not been accounted for yet, and this to me gives me a little bit of an indication in terms of what I can expect on the day, right? Either, right, I'm going to be asked to do this, to consider it, okay? Either I'm going to be asked to do it. Please reflect our financial statements after the accounting of the decision to sell, right? What will our accounting statements look like, right? Or please share with me the note. What will the note look like? after we've accounted for or considered the accounting impact of this decision to sell, right? So it could actually be an execute, do task, right? Actually do it, or so I can just let me just type better here. Expected tasks on the day. Well, it could actually be the provide Fs after decision to sell, provide notes after decision to sell. So it's almost like an execute task, right? I want you to do it. Please account for this thing. Or it could still be a review, right? Susan, I have drafted our Fs after this decision to sell, or I have done the note, if it's 5, if it's applicable, and can you please go ahead and review it before we incorporate it into the Fs or whatever the case may be, right? Okay, so this almost gives you a bit of an indication in terms of what you can expect. Now, you can expect one or the other, right? But what's definitely for sure going to happen here is that you're definitely only going to be given key pieces of information on the day, right? You're not going to be given everything to allow you to sort of make some sort of mock solution and go in there and just copy paste from your research. FYI, if that is your approach to responding to these exams, you're going to get such a rude awakening very quickly, and you're not going to be successful, right? So you're not going to be able to do that. The questions are going to be designed in such a way that it limits your ability to create mock solutions and just come on the day and copy paste. Okay, so you are going to get key pieces of information on the day. But now the question is, during the pre-release information, you need to identify those key pieces of information that you are expecting on the day. And then you need to think through, okay, whether it goes left or right, this way or that way, what will the impact be on my approach or my thinking? Document that in your research so that you can use that as a reminder if you forget, because ultimately the research should be in your brain, right? So you shouldn't have to reread your research on the day. But if you need to, you can just open your file and sort of consider it very quickly as a reminder. Okay, but this sentence, I think, for me at least, gives me an indication of what I can expect on the day. There is no need to concern yourself with tax implications relating to the disposal. We can always obtain advice at a later stage. Okay, so this is very clear. I'm sure you're all comfortable with these by now. A negative trigger for tax. Okay, give this some consideration, and we will talk through your insights early next week. Okay, so think about all of this stuff, right? And we will have a discussion to walk through your insights early next week, right? I can assure you, as a task, it's unlikely that you're going to get a task that says give me a summary of the accounting treatment. Okay, that's definitely not going to happen. This walking through the insights could be in the form of, hey, use this information, right, and draft something that we can use in order to walk through your insights, right? That's more where you can go. You can go like, okay, here's more information. Use it to draft some sort of memo, okay, and then I'll set up some time with you in the week that follows to walk through your memo. Okay, that's more in line with the task that you can expect on the day. Cool. Let's walk through this information now and see what insights we can gather. Now again, remember, detailed analysis of this information, because we need to do all our thinking in the 5 days, because there's not going to be time to do thinking on the day. So we've been given summarized financial and other information for Limpros pre-primary schools. Okay, so for 2020 to 2021, we've been given some management accounting like information here for the number of schools, which as expected is flat. Average number of learners, which has gone up slightly. Average tuition fees, which has also gone up. No bursary learners. Early settlement discounts, which has gone down. You would have analyzed this with Rendani. And the number of learners who qualified for the early settlement discount also dropping, maybe because of the liquidity crunch that everyone's experiencing in these environments. But all of this management-related information you would have unpacked in quite a lot of detail with Rendani. So sort of very similar thinking, very similar themes you can pick up and think through here. Okay, but one of the very important things that you need to remember from a context perspective is that indicator of impairment, right? The precarious situation that the pre-primary schools find themselves in, unable to sort of shift and pivot in COVID, unable to shift and pivot in the blended style of doing things that has happened post-COVID. And also the fact that management is steering away from the business line because they don't see the growth anymore, which suggests sort of restricted or strained future cash flows, which all together indicates an indicator of impairment, such that we expect that it's some of that impairment that we recognized last year and this year to relate to the pre-primary school. Okay. Now, extract of the income statement. Again, now we're looking at this in the context of our disclosure, right? So, in other words, for the income statement side of things, the first thing that comes to mind, or the first thing you should be thinking about, is whether if this is a discontinued operation. If the pre-primary school is a discontinued operation. Okay, what is the impact of this, right? How are we going to disclose or present this information in our statement of comprehensive income, right? How we present that separate section, right? And if you look in the IFRS 5 illustrative examples, you'll see a bit of illustrations on how this looks like, okay? Or in your research, if you get one of the audit firms' illustrative financial statements, right? Those documents can also give you an indication of what those discontinued operation disclosures can look like, right? First prize though, look in the standard. That one is nice, it's cleaner, it's less complicated. But if you want to see it in a live example, then you can also download one of these audit firms' illustrative financial statements. They're quite awesome documents when you just want to have a look. If you don't know what a certain disclosure looks like and you want to sort of consider it or see what it looks like live in a set of apps, those documents are actually quite great resources to use. Okay, so now see how we're sort of thinking about iterations here, right? If this is a discontinued operation, what will this look like? If it is not, what will the disclosure look like, right? In what scenario do we have a separate section where we present the results of a discontinued operations separately from continuing operations? And with disposal, where we don't meet those requirements and we only have a disposal group here, do we still need to split the income statement in that fashion? Okay, I'll leave you to think about that. But that's what you should have been thinking about as you were reading through this information, right? First things first, on this income statement side, how do we present this on the face of Limpros financial statements? Okay, now going line by line. Okay, total revenue net of early settlement discounts, right? Okay, cool. Sort of say fine variable consideration that has to be incorporated in the revenue line. Okay, no real concerns there. Operating costs, sort of before depreciation, amortization. We've got depreciation in the next line, depreciation again in the next line with a star here, and amortization. And we're told everything is on the cost model, right? This is very important context, right? So we don't expect any revaluations here. So let's talk a little bit about this. So let's talk about what we're seeing. So depreciation of these various non-current assets and also amortization of an intangible, right? These are all assets. All of these three assets would be assets within the scope of IFRS 5, the measurement scope of IFRS 5, right? They wouldn't be scoped out. Therefore, what are we thinking here? So the question is fine. Depreciation is okay. Okay, so long as before classification into IFRS 5, right? Because remember, once it's classified into IFRS 5, we cease depreciating, right? So this is fine, right? So long as this happened prior to reclassification. So again, it's very important now to ascertain when that reclassification happened. Because the board already decided in Q3 of the year, okay, we can expect some depreciation, right? So you see how I'm linking context to create an expectation, right? Q3, I would expect at least in terms of applying the IFRS 5 criteria, because that board decision is very important when applying my requirements for IFRS 5, then I can almost assume that before that board approval, we didn't meet the IFRS 5 criteria. Therefore, I would have been depreciating the assets within this disposal group, right? Therefore, I expect this to be 3 months worth of depreciation, at least, Okay, if it's out of line with my expectations, then I call it out. Another thing that I'm hoping that you are all thinking with the context that you had with the impairments is, where are the impairments, right? I was expecting to see some impairment here, right? Either from last year, right, when COVID was still running rampant, right, or this year, because not only do I have so many indicators of impairment that we've spoken to quite a few times now, also the decision to sell this division because of those reasons can also be considered to be an indicator of impairment. Therefore, before we reclass all of these assets into IFRS 5, it is then important to account for it per their underlying standards. What does that mean? For buildings, for instance, on the cost model, it's important to depreciate it up until the date that we meet the IFRS 5 criteria. However, before we reclassify, test for impairment. So do IAS 36 first, and then flip it into IFRS 5. Okay, so there's an impairment here that could potentially be missing that we need to question, right, as to why there's, and you can see how the reasons are different in the 2 years. 2022, right, definitely I would have expected some impairment, right, because I was in the thick of COVID. It was the division that was mostly hit. 2021, maybe, right, some impairment again because of the decision to sell, right? Two separate decisions, two separate reasons, but one essential, one point, one concern, one thought. Okay, but we're thinking through this, we're asking questions, we're building the scenario. Okay, finance charges, okay, fine. So if we're disposing of this division with all the loans, okay, then it makes sense that the finance charges should also be part of the discontinued operations. Tax, right? Are we expecting tax to form part of this discontinued operations? What's going to happen with the tax obligations, right? The tax obligations will all be realized on the sale. Right? So we're not going to transfer our tax obligations to the next party. We're going to incur a taxation cost or a tax expense when it comes to the realization of this asset when we dispose of everything, and that's going to be for our own account. By our own account, I mean Limpros, from Limpros's account, right? So we're not going to transfer this to the buyer of this pre-primary school. So from a taxation perspective, that's all going to be realized and settled. And that also relates to deferred tax. Okay, on the balance sheet side of things, again, given a better picture in terms of what assets exist on the balance sheet, right? And then, right, remember our conversation up here where we said a lower of carrying amount and fair value less cost to sell, right? So for carrying amount, we account for everything per their underlying standards. And in fair value less cost to sell, we brought in IFRS 13, okay, for the disposal group. When determining the carrying amount for the disposal group, it will be essentially the net asset value of the disposal group. So we need to determine the carrying amount of all these assets and liabilities. So what comes into scope? What comes into scope of your research is all these underlying standards. I'm not going to write them all down because I'm sure you guys are all comfortable with all of them, but you need to have basic understanding, fundamentals of IFRS 16. You need to have fundamentals of 38, intangibles. You need to have fundamentals of IFRS 9, right? For the trade receivables, right? Including ECL, that could come at you. Consider the prepayments, right? For refundable, non-refundable, right? Cash and cash equivalents will be IFRS 9. That'll be quite simple. The long-term loans, right? IFRS 9 comes into scope. Deferred tax, remember, that gets realized. So we're going to remeasure the manner in which we're going to remeasure our deferred tax number from realizing the assets through use, but rather realizing through sale. Okay, to remeasure our deferred tax number. And also, we're not going to transfer it as part of the disposal group. That's Limpros' tax obligation. But also remember, we were told not to worry about tax. So it may just be a question of should this be in the disposal group as opposed to recalculated deferred tax, right? So using that negative trigger to sort of guide the thinking or unpacking rather of the trick of what I'm seeing. Okay, IFRS 9 or IAS 37. And then IFRS 15, right? Income received in advance, or contract liability, and tax we already spoke about. So into scope then comes, how do I treat these assets and liabilities per their underlying standards, right? Because I may need to do that up to the date of reclassification to IFRS 5, okay? And specifically remember, I may need to consider, or I do need to consider IAS 36 for all these non-current assets that are within the scope of IAS 36, okay? Any ECL stuff I also need to consider there for impairments. After I've considered all of that, I reclassify everything into IFRS 5, and then I remeasure at the lower of let me just put the comment here. All the underlying standards, reclassify to IFRS 5 after dealing with underlying standards, determine the fair value less cost to sell of the disposal group, right, which brings in IFRS 13 into scope, right, including the treatment of non-financial assets, and then just learn about the allocations, right, of that impairment, right, sorry, not of that IFRS 5 impairment, IFRS 5, I'll call it a remeasurement, and I'll say, if applicable, limits the lower of, to the assets within the scope of IFRS 5 for measurement purposes. Okay, and also after you've dealt with all the disclosure considerations, okay, then you can deal with the measurement consideration. You can deal with all the disclosure considerations, right? What will this look like if it is a discontinued operation versus not, if it's just a disposal group, right? What do those two disclosures look like on the face of the statement of financial position, and the notes? Again, you can do the same exercise that I same advice I gave you for the income statement. Either look into the IFRS 5 illustrative examples, or look at the PwC or KPMG illustrative financial statements, and you should be able to see what the disclosure looks like where you have a disposal group on the balance sheet versus where you have a discontinued operation on the balance sheet. How does it look like? And also, what do the notes look like? What do we need to provide note disclosures for? And from a disclosure perspective, right, in IFRS 5, also remember the qualitative disclosures that need to be provided, right? What qualitative type disclosures need to be provided? That's probably something that I should have mentioned much earlier on. And try and provide them, right? So when you look through all of the qualitative disclosure requirements in IFRS 5, see if you can provide those disclosures using the pre-release information, right? And then where there are gaps, again, note those gaps. For disclosure, remember, you just be needed to be given the information. So you just say, okay, fine, this needs to be disclosed, that wasn't, that was, that is, that was, etc. All right. So also think through that in your research. Cool. And that brings us to essentially to the end of the preparation work that we needed to perform ahead of time in terms of this trigger. All right. So a lot of work to be done here, people, and also linked to the fact that IFRS 5 is almost like it's a standard that does not stand alone, right? So it pulls in other standards into its orbit. So the key really to robust research for this research and preparation for this task or this trigger was being able to identify which standards are within the orbit of IFRS 5, and then consider those two. Think about those two, and analyze all of this information that you're given. You're given rich information here. To an extreme extent, such that you're prepped on the day. You've created an expectation of what information you expect to receive on the day. You have a high level expectation of the task that you can be asked to do on the day, and then you can come through 100% prepped to answer on the day. So during this period between now and when we actually have a session together sometime next week, please do the work. So please do the research, sort of guided by the discussion that we have had. I will share a single slide after the session that just summarizes the trigger and all the detailed sort of work that you need to do. I was hoping that you're keeping notes on the side. This document is the same document that you have that Brindani shared a link of, where he worked through the document number 2, I believe it was, right? So it's the same document. So just open that one and you see all the comments that I've written on this page. You can even see it done in this document up here. And then, yeah, do the research, do the work, do the prep, and then let's come through on our session that we're going to have together next week. We don't have much time, but if you've done the work, we'll be able to have robust discussions in terms of the IOD, and then have even further robust discussions in terms of what's expected of a candidate that is competent. Okay, thank you so much everyone for the time. Hope you enjoyed the session. I really did, and I really look forward to meeting you. When we do meet later on, I'll just put my camera on so we can have a face-to-face, so we can see each other, and then we can take it from there. Have a fantastic day further.